MENA's Green Finance Landscape for Smart Grids and Sector Coupling. I'm very pleased to have you on the call today on this webinar. We were very pleased to see there was so much interest in the topic. And we have a very interesting agenda that I would like to share with you. Dominic, if you could move to the next slide, please. So first, my colleague Caroline Steinbacher will introduce the MENALINKS project, which is the framework for all the work we're doing here. Then Dr. Maged Mahmoud will talk about the bankability dimensions of smart grid and sector coupling projects. Then my colleague Dominic Peper will introduce the MENALINKS Finance Landscape report, which discusses available financing sources in the MENALINKS countries. And then the remaining time of the 1.5 hours, we have a roundtable on the bankability of battery energy storage systems. And also the option to ask questions and get answers from our esteemed panelists. I'm very pleased to have a very esteemed group of panelists. Marwa Mustafa Khalil from IFC, Dr. Khaled El Askiri from AFDB, Dr. Ashraf Khadam from ISDB, Mahmoud Morsi from EBRD, Lujain Saidi from JEF, and Iman Rashad from ETC. The Egyptian Electricity Transmission Company, and Mohamed Adel from SCARTEC, project developers, so mostly development banks, but also some representatives of the energy sector, the private sector. My name is Corinna Klessmann, so I'm guiding you through the agenda today. And with that, I would like to give the floor to my colleague Caroline, who will introduce the MENALINKS project to you.
Thank you so much, Corinna, and thank you everyone for joining. This is a really exciting milestone in one of the most important work streams I think we have in MENALINKS. If you could go to the next slide, please. So for those of you who are not familiar yet with the MENALINKS program, I would just like to give a very brief introduction into what we do in MENALINKS, and also what opportunities we have for every one of you to get involved and engaged in the work that we do. MENALINKS is a program that is sponsored by the International Climate Initiative, the ICI, of the German federal government, its Ministry of Economic Affairs and Energy. And our aim is to support, through anything that we do in this program, the integration of renewable energies in Morocco, Tunisia, Egypt, Jordan, and Turkey through smart grid and flexibility solutions and through sector coupling solutions. We started country implementation early last year, and the program will run until the end of 2029 in our 5 partner countries. You could go to the next slide, please. MENALINKS is led by Guidehouse. We're very glad to have this chance and to work together with our esteemed partners in the 5 partner countries, and also at the international level, providing technical expertise. RECRE is our partner in Egypt, but also for our regional work, we're very happy that Dr. Maged Mahmoud will give a presentation in this webinar. In Jordan, the Royal Scientific Society, NERC, is our partner. In Turkey, we work with MRC Turkey. In Tunisia, Alcor is our local partner. And in Morocco, the colleagues from IRESEN are our local implementation partner. Internationally, we're supported by EGI, ISDB, RENAG, and 2 Fraunhofer Institutes for modeling aspects. And each of the partners has a distinguished responsibility within that consortium. Go to the next slide, please. This one, please. Thank you. So as you can see here, MENALINKS doesn't have one type of activity. So it's a really holistic approach where we try to tackle the challenge I initially mentioned of integrating renewables in systems that have a rapidly increasing share of renewables, and also a great ambition to do even more. And we tackle this challenge from various angles through stakeholder dialogue, which we want to promote through techno-economic assessments and strategies, technical support as well, of course, through showcases and innovation competitions, through policy and regulation support, dissemination and regional cooperation, capacity building, and gender. And for those who followed the slide attentively, I just skipped on purpose the business models and finance one, because this is what we want to focus on today. And it is really a work stream that is at the very core of MENALINKS, because it makes things happen, it makes things possible, and is absolutely necessary for implementation. If you could go to the next slide, please. With our work in so-called focus areas, which have been selected by our political partners, the energy ministries of our partner countries, we want to enable business models in new areas, in new technologies. Just to give you an overview of the topics we focus on in each of the countries we work with. In Egypt, we've been very happy to support the Egyptian government's effort in promoting smart mini grids. In Morocco, our focus is on urban flexibility, urban smart grids, and demand aggregation. The topic of industrial flexibility has come into the focus in Jordan and in Egypt as an important focus area. And in Indonesia, battery energy storage systems are our focus area. In Turkey, we work on a twofold focus area, on inertia provision and on voltage control. And in each of these areas, we want to really follow the topic from the conceptual or regulatory stages until as closely as possible to the implementation of actual projects, for which, of course, the financial aspects and financial mechanisms are a very important condition. If you could go to the next slide, please. This is why the finance work stream, in the context of which today's webinar takes place, has such a central role to play. Through the work in this work stream, which is led by Dr. Corinna Klessmann and Dominik Peper from our team, together with our partners, we aim to improve conditions for finance, for the financing sector, and for financing and actually implementing smart grid and flexibility projects in MENALINKS countries. We aim to contribute to a more transparent knowledge about investment environments, barriers, potential solutions that could address these barriers. We want to inform or contribute to informing, including through this webinar today, about potential business models, create opportunities for investors and project developers, and also, of course, the public sector to connect and match, ideally. And we want to enable best practice sharing and capacity building among stakeholders who work in this field, with an aimed impact of increasing the likelihood of investments in the type of projects I mentioned. If you could go to the next slide. And this is also the last one, how to engage with the program. First of all, of course, by attending events and opportunities like today. So we're really grateful to see such a large number of people interested in this webinar. But we also encourage private technology and solution providers to engage with our program. In a dedicated work stream we have to make sure that the private sector perspective is fully represented. We also invite you to engage on just this thinking and this conceptualization of new business models we want to do. And of course, we want to share information about regulation and opportunities. We would like to invite you to sign up for our newsletter, which is to start soon by just copying this QR code. And I think in the follow-up to this webinar, we can also share a link on how to register to keep yourselves informed about future opportunities and how to get involved with MENALINKS. So that's it from the general presentation. I'm wishing everyone a successful webinar.
Thank you, Caroline. And yes, as you see, there's many options to get involved with the MENALINKS program. So we would be really happy to have you on board and interact with you. With that, we move on in the program. Dominik, please, the next slide. And I'm very pleased to invite Dr. Margit Mahmoud from the Regional Center for Renewable Energy and Energy Efficiency, RECRE, who will talk about bankability dimensions. Dr. Margit, the floor is yours.
Thank you, Corinna. It's a pleasure being with you today and I trust we will learn a lot today, and it will be a very informative and fruitful discussion, especially with the balance that we have. We'll speak about the bankability dimension for smart grids and sector coupling projects, which is somehow also based on the experience on emerging technologies that we have been seeing over the past years. So next slide, please. So how we can say a project is bankable? We look into several aspects. In fact, a project is bankable when it meets the requirements for investors and lenders for providing capital to the project. And here, when we speak about, for example, the perceived risks, we understand that risk is somehow that an adverse event that would happen, and then the likelihood of this event to appear, whether this would be low or high. And this is why on the spectrum if we have high perceived risks and low bankability, then the project will not be materialized. While if we have high bankability criteria and we have, for example, sufficient revenues, we have secured all the ecosystem condition to have a project, then the project will be bankable. So we are looking into low perceived risk as much as we can and high bankability together. And to explain this more, we can move to the next slide, please. So what is considered in the bankability issue? Of course, we look into two sides, the project environment and the project planning. And when we look at the project environment, we look into several considerations, the economic, political, legal, regulatory, and physical. And of course, each of these has its own, in fact, internal factors that we should look into. And from the project planning perspective, we look into the pre-feasibility and feasibility assessments, financial structure, contracts, licenses, insurance and guarantees as the representation of risk allocation and risk mitigation, contractual structure, and so on. Of course, among the most important is the financial structure of the project, which really matters for both the investor and the lenders and the shareholders and also the stakeholders at a certain extent. Next, please. So let's dig somehow into each of these elements. For the project environment, when we speak about the economic, we look into the market size, how the market is growing, how secure is the market also. Do we have stable inflation, low? This would be pretty good. If we look into the currency, the exchange rates, etc., the domestic capital market, and whether we have a strong banking system, whether there is a commitment for green transition in this banking sector, sustainability, and we can see this across the region, in fact, in several countries, especially the project countries. And when we look into the political side, we look into the clarity of the policies and how this align with the strategies that are in place, stability of the policy without having retroactive measures, etc. And then for the legal side, we look into how conducive is the environment for the legal text, I would say, for the investors. Are they investor-friendly laws, public-private partnerships possibilities, how these are governed and regulated? Of course, the critical issue of arbitration, and we have seen a lot of issues regarding this, especially when we have a large share of foreign investors. And then the regulatory side, and here we look into the licensing procedures, for example, the adequate procedure for project development and procurement within the country. We look into the permits and number of permits required, the land, the templates for the contracts, etc. And then the fiscal incentive, and here we speak about tax laws, exemptions, customs, duties, etc., availability of different financial incentives, rebate, grants, etc., and how we can mix all of this together to ensure that the entire project or the portfolio of projects are really profitable for the investors and the developers, of course. And then we look into the project preparation and planning, and here we look into having sound technical, financial, and economic planning for the project, and in fact looking also into the environmental and social impact assessments. And these are pretty critical for the projects because we need to look into the details and how our projects would affect different aspects. But of course, the technical and financial are very important. And then we look into the license and permits and the authorization that could be acquired and how lengthy is the process, how complicated is the process. And for the financial structure, of course, the most important is the revenue versus expenses forecast. And do we have a suitable debt service coverage ratio? Do we have the stable income in which currency? The possibility to, for example, send the money outside the country and how to do that, etc. And we look into the contract structure, and here all the different contracts that are needed, whether this would be in terms of BBAs, grid connection, land allocation, etc. So all these contractual structures, and we have counted more than 11 types of contracts that need to be secured for when we speak about medium to large scale projects. And among, of course, the most important are the BBAs and the liabilities in each partner or each party in this project. And finally, the risk allocation. And the risk allocation is really related to two things for when we look into our new technologies that we are discussing under smart grids or battery energy storage. We look into the risk tolerance and risk appetite, and both are in fact requires further attention from all the actors because of the risk allocations. And here we look into insurances, guarantees, the de-risking instruments available from different partners. And here we are discussing technologies that are not that much have been there for a long time. So we need also to be sure that the banking sector is well informed and well prepared to address these new topics. Next, please. And then the final slide we look at is, I'm not sure if the final or the one previous final, the perspectives. And we have different views on bankability, in fact. The private sector perspective, the public sector perspective, and the multilateral development banks perspective. And the private sector and also the banking sector, the commercial lenders, etc., they look into the bankability mainly from the perspective whether the project will be profitable or not, and whether this is rewarding, comparable to low risk alternatives in the market. And of course, the interest is determined by the risk return ratio. And for example, when we are looking into domains like digitalization, smart meters, etc., whether this will be easily adopted, how this would be in practice working, and what will be the operational modalities for the project, etc., and how this would affect the profit and the revenue generation on the project. And then when we look into the public sector perspective, whether this we are speaking about the national ministerial governmental entities, or we look into the cities level, etc., we look into the social returns. And here the social returns refer to the job opportunities, employment that could be created, development potential, creating value within the society, financial soundness in the project, and how this would contribute to the overall KPIs of the countries, and the cost effectiveness, of course, of the sector, whether this would improve the cost effectiveness of the service provision for electricity, especially here in our case. And then we look into the multilateral development banks, and the emphasize here on the potential development and social impacts. And here we are looking into typically the SDGs, poverty alleviation, gender equality, environmental sustainability, etc. And of course, we know that most of the finance is coming now from climate and green finance. And here, we, of course, would have targets for emission reduction and environmental benefits that are clearly outlined, and they are metrics, and they are, in fact, preconditions for the finance, and they need to be validated within the project course, of course. So these are the elements that we, from different perspectives. Next, please. I think this is the concluding slide. Next. Yes, correct. So this was my last slide. Thank you very much, and I'm at your disposal if you need any clarification, and I'll give Karina the floor again. Thank you very much.
Thank you, Dr. Maged. This was very insightful and setting the scene for the discussion on bankability of battery energy storage systems and more broadly of smart grid and sector coupling technologies. Next, I would like to hand over to my colleague Dominic Paper, who will present to you the finance landscape report that was recently launched within the MENALINKS project. Dominic, floor is yours.
Thank you very much, Corinna. Thank you very much, Dr. Maged, for introducing us to the important concept of bankability and its prerequisites. Well, bankability is needed for financing projects, but where is actually the money coming from? What financing sources are available? This was actually at the core of our report. This was the leading question for drafting our new finance landscape report that we have just published. So it's my honor today to briefly introduce you to this new report. Corinna mentioned it already. We have named it Navigating MENA's Green Finance Landscape for Smart Grids and Sector Coupling. And this describes already quite well the aim and scope of the report. So what have we done is mapping and analyzing existing financial programs and facilities that are focused on energy transition topics with a special focus on smart grid and sector coupling projects, which are the MENALINKS focus areas, as Caroline already mentioned. We have focused the report on the MENALINKS partner countries, Egypt, Jordan, Morocco, Tunisia, and Turkey. And we have looked at financial programs from both the concessional as well as the commercial finance sphere, and that is including governmental programs and facilities of development banks, but also international climate funds. Last but not least, we included the analysis of green finance initiatives in the capital markets and in commercial banking. So yeah, you see on this slide already a download link for the report. Feel free to copy the link or use your smartphone to scan the QR code. The report is now available for download, but of course also later on you will have the possibility to download this report. So after this introduction into the aim and scope, let's quickly dive into the contents of the report. So what have we actually done in the report? Actually, 5 different things. We have a short introduction on financing instruments and their application. We then move into the core of the report with an analysis and the mapping of the concessional finance programs of national and international financial institutions that are supporting the energy transition in MENALINKS countries. We have then done an analysis and a mapping of international climate funds, which are complementing concessional finance programs by IFIs. And in part 4 and 5, we have looked at the commercial finance sphere, analyzing sustainable finance frameworks and the engagement of commercial banking in green finance. So what can you actually take out of the report? Well, it first of all delivers insights into the general financing activities relevant for MENALINKS focus areas, so namely sector coupling and smart grid applications in the concessional and the commercial finance sphere. And it gives you a first good orientation in this general finance landscape. To talk a bit about limitations, it is not to be used as a guideline on how to finance smart grid or sector coupling projects. This might be something we hear a bit more of our panelists today. So Dr. Majid, in his presentation, introduced a little bit the prerequisites for achieving bankability. And now I want to give you a bit more background on why we wrote a report with a focus on concessional finance. So what we see, especially in the market for smart grid and sector coupling projects in the MENA region, is that there are still a few barriers remaining. One of the major barriers are actually the markets. So the markets for smart grid and sector coupling technologies are still in development in many MENA countries. And so the connected business models are also nascent and are just developing. So we see quite a few business models that are not yet viable. And that is often due to regulated markets. Regulated markets also sometimes cause insecure or low project revenues. So there's uncertainty about the market conditions and the future market conditions, and revenues are sometimes still low. And this is in combination with new technologies, novel business models that sometimes require high upfront investments. So the combination of uncertainty, low revenues, and high capital cost, of course, creates large challenges for the project developers. On top, we see, as Dr. Majid already mentioned, some external risks, such as inflation and currency risks, so that further restricts the access to low-cost foreign currency loans. So what are the resulting effects? Well, in general, we see high capital costs for the projects, and this creates the challenge of building financing models that enable commercial viability. And therefore, to bridge this developing viability gap in some projects, there is a need for concessional finance to help bring these projects to commercial viability and be able to scale them. So that much on why we focus so much on concessional finance. Who is providing concessional finance? So mainly concessional finance is provided by multilateral development banks, as well as bilateral development banks. There are, of course, many governmental programs, but the main source for concessional finance still are the MDBs. And you see in our report, we have analyzed the activity of MDBs in the different MENALINKS countries, and you see that there are many actors active in the region, and most of the actors are actually covering all countries. Some have more regional foci, but in general, there's a good activity of the different players in the region. As said earlier, there are next to the MDB programs also complementing international climate funds, which we have also analyzed in our report. We have analyzed the general activity of the funds in the region, so which funds are delivering the most funding and which countries are benefiting the most of this funding, and we have described this in detail for each of our MENALINKS partner countries. So when you look into the report, you will see sections on each of the MENALINKS countries, and we cover the existing financing schemes of development banks. We cover the existing funds, and thus we give you a good overview of the general activities happening in the countries that are relevant to energy transition projects. We have also looked at the commercial finance sphere, and there we have, for example, analyzed the development of sustainable finance frameworks. In this graph, you can see the different stages of implementation of sustainable finance frameworks and the status quo of progress in the different MENALINKS countries. And we're happy to see that actually all of our partner countries are already in the stage of implementation of sustainable finance frameworks. So that means that actually in all of the MENALINKS partner countries, we have either sustainable finance frameworks under development or even already adopted sustainable finance frameworks. And so all of these countries are really trying to push forward the private sector engagement and to help activate private capital for the energy transition. So let me quickly summarize on the key takeaways of the report. First of all, we can say that concessional finance will be critical for driving projects in the MENALINKS focus areas, because we still have the mentioned barriers. We see that international climate funds are becoming a key source for concessional finance, complementing existing programs by development banks. And we see that blended finance is actually becoming more important. And this is the combination of concessional and commercial finance in one financing structure, thus actually increasing the available financing and mobilizing private capital to scale investments. In the commercial finance sphere, we see that the sustainable finance frameworks are really key for guiding the necessary private capital to direct it into the direction of investments into the clean energy technologies and innovation. The finance frameworks can actually guide the capital, and we are, as said, happy to see that there's actually progress in all MENALINKS countries, and we see first issuances of green bonds, and we see green taxonomies being put in place, and ESG disclosures being made mandatory. Last but not least, we have also analyzed in the report the engagement of commercial banking in green finance, and we also could see many programs developing in green lending, in green bond issuance. But last thing to say is that, of course, there is still further mobilization of private capital needed to actually have enough investment capital for the investments needed into the energy transition for reaching the climate goals. Yes, and with this, I would like to close and invite you again to take a look at our report, which is analyzing the finance landscape in the commercial and concessional finance sphere in all MENALINKS countries, and this is describing available programs for concessional finance in detail. Yes, thank you very much.
Thank you, Dominic. And yes, hope the report is useful for many of you. And with this introduction, I would like to come to the main part of our webinar, which is the roundtable on perspectives on required steps for creating bankable battery energy storage system projects in the MENA region. Dominic, if you could move to the next slide. Here you can see again our esteemed panelists that are with us, representing both development banks, project developer, and the Egyptian electricity transmission company, as again somebody being involved in a battery energy storage project. So I would like to start with Dr. Khaled Al-Askari, Principal Energy Officer at the African Development Bank. Dr. Khaled, if you could turn on your camera and give a short intro statement on how you see current and future business models for a large-scale battery storage system in the MENA countries. I mean, we know that BESS systems are much discussed in all around the world, basically, but we are particularly interested of what are specific conditions and perspective in MENA.
Thank you very much, Corina. I have turned on my camera, so I hope everyone can see me. And thank you so much to the MENALINKS for the kind invitation to your very insightful webinars as usual. So my name is Khaled Al-Askari. I am energy specialist with the African Development Bank, and I am based in the North Africa region, particularly in Cairo office of the African Development Bank. And I mainly cover North Africa, but I also have the pleasure sometimes to support our teams working in other parts of Africa. And in particular, I had the privilege of working on the first BESS project the African Development Bank started working on in South Africa. That was back in 2018, actually, when BESS was really very much new to the entire continent. Pleasure to be here with you today, and I'll try to be very quick. I see that you have actually a diverse panel today from fellow colleagues from other DFIs with diverse backgrounds. Some colleagues have more commercial financial background, and some colleagues have more technical background. So maybe allow me, Corina, to focus more on the technical aspects of the bankability of BESS, and I rely on other colleagues to cover the commercial aspect as well. And of course, we can complement each other. So if we look at the technical bankability aspects from DFIs like the African Development Bank, when you look at the BESS project, whether the project is a standalone or a hybrid project, meaning that the BESS is co-located with typically with solar or wind energy technologies. I think it's very important to look at the entire sort of project design stage because there are different checks that we do through the different project development stages that are required for us. We start with the very beginning, actually, from the concept of the project. It's very important to understand from the concept of a project what the exact functionality of the BESS is going to be in that particular project, because it has an impact on the selection of the technology and the design and the details of the BESS. Typically, BESS is used for energy storage. Typically, that's a typical usage, but it can also provide other ancillary services such as frequency response and voltage controls, RAM rate control, etc., etc. So it's very important to understand that certain markets, the ancillary services might be actually the main purpose of the BESS. We have not seen that yet in MENA. Typically in MENA, the main usage will be energy shifting or energy storage. So you store in the times of excess generation, and you then discharge in the times of excess demand. But ancillary services come as a supplementary objective of the project. So it's very important to understand this. Let me cite, in this particular case, let me cite one specific practical example, simple example, practical example. When you design the BESS and you the supplier of the BESS will typically give you part of their warranty. They will typically give you a warranty that is limited to a certain number of cycles, charge and discharge cycles per year. So if the project is not adhering with those cycles, it will obviously be breaching the performance warranty by the manufacturer. So again, the PPA will be requiring the project to perform certain services from the BESS, and these services wouldn't have to be fully aligned with what the supplier is providing you. So again, if we don't completely understand how the BESS is going to be used in a particular project from the very beginning, are in the design stage, in the technology selection, and so on, this can cause technology risk from financiers' point of view. Another important aspect, technical aspect in the BESS is the guaranteed capacity and guaranteed power rating of the BESS. As we all know, the BESS degrades with time, and nowadays we are seeing projects for long-term PPAs, talking about almost 20 years now of BESS PPAs. So typically the capacity of the BESS is going to degrade during that project time, and you have basically two options: either to oversize the BESS from the very beginning of the project, or to do what's called augmentation, which means that from time to time you would have to install additional battery modules and additional containers in order to top up basically the capacity. So again, these are decisions that will have to be taken at the very beginning in the project, in the design stage of the project, that will have to be verified by the DFIs that they are happy with the option that has been selected by the project developer, by the requirements of the project. Then we'll come to the issue, a very important issue for us is how the BESS is going to be procured. And as Dr. Magid mentioned in his presentation, the technology, despite the fact that technology is really gaining popularity worldwide, it does not have a very long practical track record like, for example, PV and wind and so on. And as such, it could also pose a bit of a technology risk for the financiers. And in this case, we really need to make sure that the supplier of the BESS, OEM, the manufacturer and supplier of the BESS, have good reputation in terms of renewable energy in general, because many of the BESS companies right now used to be renewable energy companies, so they are actually providing other equipment and so on, and BESS becomes as a new business model for them or a new business branch for them. So we look at the track record of the manufacturer. We look in particular, in case of the BESS, on the sustainable sourcing of material, because this is a very important issue for us. We look at sustainable manufacturing processes and procedures and everything. And most importantly for us also, we look at the type of warranties that are provided by the manufacturer. And as I said, they have to be aligned with the requirements of the project, and in particular as specified in the PPA. Typically, the manufacturer, the O&M, will provide two warranties, a product warranty, typically between 2 to 3 years. This is what we are seeing in the market right now. And they will provide a performance warranty, which is far more important, and this should be aligned as much as possible with the duration of the PPA. If the performance warranty is not fully aligned with the duration of the PPA, then we'd advise the project developer to engage with the contractor, with the supplier, in a long-term supply agreement, LTSA, in order to make sure that we cover the entire duration of the project in order to minimize the technology risk. Next point is O&M. We have to make sure that the O&M is experienced in BESS systems. Again, BESS projects are relatively new in the entire MENA region, so we don't have many project operators that are familiar with the BESS. So we have to make sure that they do have the capacity and they do have the know-how in order to operate the BESS properly. And most importantly, also to make sure that they do have the project, financing of the project, the financial model, the cash flow of the project, so allows proper allocation of budget for O&M for the project in its entirety, but in particular for the BESS, especially if you are going to do augmentation, because this will be an important cost item. Finally, the project has been completed successfully, operated, etc. We come to the end of the term of the project. The project is now coming to an end. It's very important for us to look at what kind of strategies and plans will be put in place by the project developer in order to ensure that the BESS is being disposed of in a sustainable, environmental friendly manner. Even if the BESS is at the end of its useful life, still the batteries do contain hazardous waste, so they should be disposed of properly in order to ensure, of course, that the environmental, social aspects and environmental aspects of the project are very well maintained. So let me stop here. As I said, I focus mainly on the technical aspects. I'm sure my fellow panelists will cover the commercial aspects, but I'm happy to clarify and add to any other topics as needed. Thank you.
Thank you, Dr. Khaled, for this very insightful perspective and also the technical details, which I think are very valuable and useful. And just to mention to the audience again, if you have any questions you would like to raise or get the answer, please post them in through the Q&A function. With that, I would like to move to the next panelist, and that is Marwa Mustafa Khalil. She is investment officer at the International Finance Corporation. Marwa, maybe you could give us some insights on from the more commercial side on financing BESS systems and what is important from your perspective and what's the experience of IFC. And I would ask all panelists if you could stay within 5 minutes, so we still have some time for Q&A at the end. That would be great. Ava, can you turn on your camera? Does that work?
Yeah, I think it's turned on. Can you hear me?
Yes, perfect.
Okay, great.
Thank you.
Thanks, and providing the webinar. It has been a very interesting discussion, actually. I can just agree with the presentations in the morning and with what has just been discussed by Dr. Khaled Askari in terms of the technical performance. Just starting with introduction, I am Marwa Khalil, Investment Officer with IFC. IFC is a private sector arm of the World Bank Group, where we support private sectors and private companies in their projects. I am with the infrastructure team, working on North Africa, but I'm also part of the Mission 300 team, covering the new initiative by AFDB and the World Bank Group for Sub-Saharan African countries on access of electricity. Let me start first with the different business models, right? So BESS has been deployed by both private and public utilities. When it comes to the private, it can be either integrated with renewable energy to provide storage and load shifting use of cases, or for standalone purposes. And for a standalone, it's meant to be for grid stability, providing voltage control, regulation, peak shaving, whatever you can put under the ancillary services part of that can be delivered from a standalone BESS. And the same model can be also financed publicly through utilities. And in this case, it's mostly for the grid stability part. So those are the main business models that we have seen in countries in like MENA and across the world. There are other models, maybe not relevant to MENA, which is a battery as a service, for example, and this is more relevant to the mini grid contexts and for the emerging small distributed environment, mostly in sub-Saharan. So that is the general or the most popular business models that are used for battery storage. Now coming to bankability, and bankability is about having a technically sound, but also about a viable project and institutionally support project. On the technical side, it has already been covered. So coming to the financial part, we as DFIs, we look at multiple factors on that. I'm gonna just mention them, and I'm happy to elaborate more in each of them. So starting first with the long-term revenue certainty, and this comes with a robust contractual framework that is put in place. And by the contractual framework here, I mean, is it a PPA? Are we talking about an offtake agreement with a state-owned enterprise, or is it with immersion type of contract? And of course, more certainty when it is with an SOE like EETC in Egypt, for example. And it is about the cost structure itself, the capex, the opex of the project. And then it's about the risk allocation framework that is embedded within the contractual framework. And this would take us to the very important point that all the technical indicators that have been mentioned since the morning has to be well knitted within this contractual framework. And because usually those projects are big and have a lot of contracts, so it's very important to ensure consistency between those contracts, between the KPIs and between the performance requirements that are put as covenants or technical requirements under the contracts of a project. It's very important also to scrutinize, and that is because BESS is new to most of the countries that we're working on the regulatory framework, on the life cycles of the project, and that is to make sure that there is a sustainable return over the lifetime of the project. And this would take us again to the technical part regarding the degradation of the batteries, for example, and for the round trip efficiency and for the expected time life, the cycles per day for the batteries. It's very important to put in place the right technical requirements that would tackle down into the returns of the project so that the returns of the project are sustainable and are maintained along the lifetime until the end of the PPA. In terms of the financial metrics, of course, we look at the financial model. We must see that there is a proper IRR in place, a reasonable and doable one. Of course, other ratios, the DSR, we need to make sure that there is other reserve accounts that are in place to make sure that the proper maintenance are done on time and there is enough funds to secure them. And of course, this would take us back to the adequate return on the projects that we're looking at. In other countries, we've worked on different models, standalone, integrated with renewables, very big sizes, like up to 1,600 megawatts hour in some of the countries, and very small sizes that are meant to be for stability of small grids. But by the end of the day, it is about how far we're ensuring a sustainable return is there. This would take us to the concessional finance point that has been discussed here. And there are practices, good practices for the concessional finance. Yes, it's meant to bridge the viability gap, but it is important to use it in a rational way so that it does not crowd out commercial investors. It's important to help de-risk the market, especially at its start, and if it BESS is new to it, but that should not be a permanent solution, and should not be used to over-subsidize the BESS projects. So rational use of concessional funds, and as the market matures, is very important to be considered. And this would take us again to a very, very important point on how far there is a national strategy to increase and reach to the level where the BESS market with renewables or a standalone is going to mature, and this gives clarity to the investors on how far this market is going to grow, and therefore visibility on the future of the market. Let me stop here and happy to take any questions.
Thank you, Mara, for this very insightful perspective on the commercial conditions and best practices for financing BESS. Let's maybe change perspective now, and so I would like to move over to Mrs. Iman Rashad, Head of Private Sector Integration at the Egyptian Electricity Transmission Company, ETC. I think it's interesting to hear. I mean, I hear that ETC recently closed a PPA on a large solar and BESS project, and you may also have other experiences. So I would be interested, not from the perspective of the bank, but from the perspective of the electricity transmission company who closes the PPA. What is important from your perspective? How have these projects been financed, and how do you see the further perspective, especially in Egypt? Mrs. Iman, can you turn on the? No, sorry, I think you didn't have camera. So, but can you unmute yourself to give your input?
Thank you very much, and thank you all, the MENALINK consultant, RECRE, and our partners, our colleagues from lenders side and developers for that webinar. And as you illustrated, we are in ETC now started to contract some projects based on the battery storage with developers. Already now in operation, we have 500 megawatt plus 300 megawatt hour PV plus BESS. And we under constructions, we have two large scale projects, 1 giga plus 600 megawatt hour for storage in New Bendan, and also 1 giga PV plus 200 megawatt hour in Naga Hamadi site. We are now in the phase under contracting for some project 1.2 giga PV plus 720 megawatt hour for battery storage. It's not contracted yet. And also, we have some battery storage based on stand-alone batteries. These projects completely contracted on BO scheme with with developers, big developers, international big developers, and national. And it's financed by the international lenders under this scheme. Why now EC or Egypt or Ministry for Electricity and Renewable Energy have a look on battery storage in the mix and included in our strategy for the energy. For a lot of reasons, the importance of battery storage in the energy mix because the balancing for the supply to store the renewable energy resources came out from the 3O projects and release it during our demand. And to reduce also the solar and wind curtailment because for the reason of the nature of that renewable projects. And the main reason and the more important reason to support the grid and enhancing the flexibility and stability and the reliability of the grid. Fortunately Egypt now is number 2 in Africa after South Africa in implementing the battery storage even as integrated with PV or stand alone. We have some functions, technical functions to use this battery storage. Some of these projects based on the energy shifting to the peak hours, and some of the other to use the frequency regulation and the voltage support, and to for the black start time. We see from the international experience because Egypt is take some slow steps in that direction because we didn't have this experience before. And when the decision makers took that decision to implement some battery storage, even integrated with the PV or stand-alone, they have the vision to use that battery storage with the renewable energy projects to support the grid and also to comply with the SDGs to reduce the CO2 emissions and support the net zero goals. We have the vision and we wish to see these projects very successful in the future. But usually or sure we have some challenges. What are the challenges to implement these projects from many perspectives? The capex, the high capex to implement the battery storage projects, the degradation for the batteries, and to negotiate with the developer about the lifetime for the batteries, because some developers base their offers on they have the PV, for example, 25 years, but the batteries used will be 15 or 20 years. So, what will be the steps for decommissioning the battery storage plants, the recycling of that battery storage? We haven't right now that experience. So I think we need the financing institutions to support the financing for the substations, for transmission lines, to connect these renewable integrated with battery storage to the grid, and they are doing, and they did, and they will do, because we have this يعني الحمد لله success journey with the international financing entities, World Bank, EBRD, AFGB, all AFG, KfW, to يعني in the perspectives of financing, and not only the financing of substations or transmission lines, or to support the developers in lending for that project, also in the technical support for ETC to have accredited consultants to do the technical work, to implement the agreements, to support ETC team, يعني to have the new clauses for the agreement, to add the battery storage to the existing BBS agreements. So يعني thank you very much all, and looking forward to continuous support يعني إن شاء الله in the future.
Thank you, Mrs. Iman. So we really see some success stories and still some challenges. Oh, now we can see you as well. Great. So I think this was very useful. I think before turning back to the banking sector, maybe a different perspective is the business development perspective, or the project development perspective. So I would like to ask Mr. Mohamed Adel whether he could give some insights on recent lessons learned with developing and implementing battery energy storage projects. I know there is this big project in Egypt that was already mentioned, but yeah, we would be interested more broadly in your perspective. What are success factors and lessons learned from a project developer's perspective?
Yes, thank you so much for this webinar. It's a pleasure to be here and speaking about this important topic, which actually the availability of battery storage systems is the one that will actually unlock the true potential of renewable energy projects worldwide, not just even in the MENA region. Allow me to introduce myself. I'm Mohamed Adel, Business Development Manager of Scatic. If you don't know, Scatic is a renewable energy developer that is focusing on developing renewable energy projects and innovative solutions worldwide, focusing on emerging markets with main focuses and main hubs is Egypt, Brazil, Philippines, and South Africa. And in these countries that I have mentioned, we have actually implemented several battery storage systems with different models and different structures. And definitely, as you mentioned, the landmark project in Egypt in cooperation with our colleagues here from the DFIs, of course, and from ETC, Engineer Iman Rashad, of course. This is also a landmark project. But before discussing in details about the different structures and the different models and the success stories, I would like to focus on the general uses of battery storage system. As my colleagues mentioned, the plain vanilla model is the battery storage, coupling it with renewable energy projects and using it more for energy shifting. And technically speaking, that's what battery do, is just charging energy and releasing energy. But there is also another angle that needs further development and further focusing and further capacity building, which is the standalone batteries, and how to start looking on the battery storage system as mentioned, as a service provider, and how it can be used to provide different services according to the needs of each market. Batteries can, aside from the plain vanilla, which is energy shifting or smoothing renewable energy project, it needs to have the path of further developments of a standalone battery storage systems, since it can provide different structures and different services, ancillary services and support of voltage and frequency to improve the quality, transmission and distribution deferral to relieve the congestion of electricity on the grid for further interconnection and reduce investments and upgrades for the transmission and the substations and the overhead transmission lines. The concept of arbitrage and charging and discharging in on and off peaks, which is more relevant to specific markets. So basically what I'm trying to focus on is that how to set the regulatory framework for further implementations of standalone battery storage systems. For example, as the countries you have just mentioned, each one of them, we have implemented different models. In Egypt, our project is a 1 gigawatt solar PV coupled with battery storage system around 200 megawatt hours, which is used for the concept of energy shifting. For example, in South Africa, we have implemented several standalone projects, but comes from the service of transmission and distribution deferral, which reduces the congestion of electricity in the grid, maneuver with the electricity on the grid so that you can integrate and connect more renewables. In Philippines, for example, it's the model of ancillary services and an arbitrage model and the spot market, where the market is a little bit liberalized, where the electricity prices are fluctuating, so can use the battery as a different asset and a different service provider. So basically, these are the several services of the batteries, and it's the concept of setting the right regulatory framework for these standalone, because that's also a huge potential that needs to be unlocked, that doesn't have to be coupled with a renewable energy project to be implemented. And it will help a lot in modernizing the grid, providing reliable electricity and improving the quality of electricity in the grid. And having a regulatory framework with a clear contractual structure and commercial agreements will definitely come as the first milestone or the first cornerstone that will help implementing this market specifically in the MENA region. And setting the right agreements, as Engineer Iman mentioned, for example, the projects that were implemented were under capacity charge payments. And there are different models that will be required and be implemented that will actually set the foundations for this type of services, a market that can be implemented for the standalone battery storage. And accordingly, when this regulatory and this demand is available, the concept of concessional financing and the availability of concessional financing for further developments and implementation of the BSS. As you all know, the BSS have went through major developments in the past couple of years, whether technically or commercially. And I believe that's the right time that we capitalize on this and maintain the momentum in implementing more batteries and increasing the demand. That will happen first through the regulatory availability. Secondly, the availability of concessional finances that will definitely support specifically in the MENA region. And of course, when these two main blocks are implemented and available, it will definitely come with further developments of the technicalities. Yes, there are limitation in round trip efficiencies, there are limitations in the cycles, there are limitations in the lifetime and the warranty periods that can be implemented, but further developments and further improvements for the batteries will have to come along with the increase in demand, the further implementations and innovative solutions and structures that the technical team can provide for the battery storage system. So basically, yes, from my experience, from the company's experience in implementing batteries, I guess for the MENA region, one of the main things that we need to focus on is setting a regulatory framework for the other services for the standalone to create another demand that is not directly coupled to solar or renewable energy projects. Secondly is the availability of concessional financing so that you can at least balance out the commercial elements of BSS at the time being, which is still not cheap. It's still at an overall expensive level. However, there was recent developments so that you create the demand and the momentum. And accordingly, throughout these developments, of course, the technicalities will improve, the efficiencies and the different models or technical solutions for storing energy will come up with better reliability and better stability. As you can see, there are a lot of models that have implemented, like the PV. In the beginning, we started with the polycrystalline, and then it was started with 200 watts, for example. Now we're talking around 600 and 700 with the different technology. So basically keeping the right framework, keeping the right financial support to make the project commercial viable for further implementations to support the technical requirements of the transmission company will definitely keep the momentum going for further technical improvements and technical upgrades for the battery storage system, which we all agree is the true unlock for the renewable energy potential in the market. Thank you.
Thank you, Mr. Mohammed, for this private sector perspective, and yeah, really great to see also the experience and the momentum for BESS development. Turning back to the financial sector or the international development banks, maybe let's continue with Mr. Mahmoud Morsi, Principal Banker at the European Bank for Reconstruction and Development. I know EBRD has been involved in different BESS projects. So just asking openly, what are elements for financing BESS, or maybe particularly looking at large-scale BESS systems that you find important? Mahmoud, if you could turn on your camera if possible.
Hi. Can you hear me?
Yes.
Yes.
Yeah.
Hi, everyone. Pleasure to be with you all here today. This is a very interesting topic, of course, of interest to all of us. Pleasure to see some colleagues that we've worked with from the public sector and the private sector and co-lenders. So it's good to be here today. I think this is a very important discussion, obviously, to guide all of us on the way forward for the development of BESS projects. I think, yes, we are. So just a little quick background. EBRD, we're quite bullish for Egypt and the MENA region. We've developed multiple projects. I think to date in Egypt alone, we've done 35 or 36 projects. 25 or 26 projects. And we continue to have quite a big pipeline of solar projects, BESS projects, solar and BESS. So we believe that this is the way forward for the sector. There are many benefits of having BESS It adds grid reliability and stability. It helps add renewable energy integration. It adds to system efficiency, is good for backup and resilience of the network. Has a lot of environmental and policy benefits. It reduces the reliance on hydrocarbons. I mean, the list goes on really of the potential of BESS that we could see in the market in countries in the region. Having said that, yeah, we've recently financed a SCATEC project with AFDB and BII here in Egypt. It's a 1 gigawatt solar with 200 megawatt hour BESS. This was just closed recently, and we do have a pipeline of other BESS projects that we're looking to finance. So the way forward, in terms of the way forward, I mean, I hear SCATEC and I hear Dr. Iman, and in terms of the issues and the struggles that they see in terms of developing these projects. And I mean, it is a crucial turning point, because we are at a stage where we are developing these BESS projects, and they're not as straightforward in terms of what they are and the structures that they have in place, which makes it challenging for the off-taker, makes it challenging for the developer, and makes it challenging for the lenders to understand whether these projects are bankable or not, and whether they are financially feasible or not. And this is relevant not only to the sponsors and to the off-taker, because the off-taker will have concerns on developing a project if they consider they're paying too much for it. The developer will have concerns if they think they are not getting enough returns for it. And that is an issue for lenders, because we don't want to be financing projects that there are concerns on whether these projects are bankable on the long run or not. That's not to say that the projects right now in the pipeline are not, but these are an important considerations that need to be taken into account when we're looking at how the market is going to go moving forward. As Mohammed was just saying, right? And as Dr. Khalid and others were saying, that at the moment we're looking at energy storage as for BESS, but in the future we're also, and I know that there are already considerations and discussions on ancillary services, but how do you structure these? And I think an important element that needs to be considered is that moving forward, from the lenders and from all perspectives, we'd like to see more auctions and standardized RFPs to be put in place, because this will help all of us understand exactly what is on offer and whether these projects are structured in the way that they should be structured, depending on what the need for these projects are. So I think this is an important element that we'll need to, we hope to see, not just in Egypt, but in the region, of more standardized auctions. We think this will help with the ensuring that these develop in a way that is sustainable for the type of PPAs that are being developed. As you know, PPA for these projects are typically in the region of 20 to 25 years, which require lending and project finance structures. Project finance structures are structures that are usually in the range of 15 to 20 years term loans. And for lenders to be able to offer this type of long-term financing, we need to ensure that the contractual framework is robust and is able to handle that capacity for that certain amount of time. So yeah, that's an important element that we're looking at. But we also think diversification is also another important element, and I think we need to see more. I mean, we're already seeing this, and more private-to-private projects, I think, is also important. So it takes a little bit of the pressure off EETC and the government from having to provide long-term guarantees to these projects, because these projects typically require these type of guarantees. So I think the more the market opens, the more you'll be able to shift away from having these sovereign guaranteed projects and are funding projects that are with private developers financing private off-takers, private off-takers. So in terms of what we look at, so I think this is overall one of the important things that we look at is the regulatory and contractual framework that's in place. So these are important elements in terms of where we're going and the direction that we need to consider in terms of developing these projects. Other bankability points that we are important to the lenders, and I mean, this has already been spoken to by others, but I think I can also reiterate this because it is important to all of us, and there are many elements. So when we look at a project, we have to look at multiple elements to this project to understand its bankability. So this includes the experience of the developer, and I think this is a really important point, how experienced the developer is in developing these type of projects, especially considering that the nascent technology of BESS and the fact that there are a lot of multiple factors that need to be considered in the development of these projects. We need to look at whether these projects are bankable from a financing structure, and that includes strong and robust financial models that have a consistent revenue stream that's not going to change through the lifetime of a project, to ensure that these projects are able to service their debt throughout their 15 to 20-year tenor, depending on the project. So this includes many elements that need to be considered, including the project costs, the operating costs, the strategy for maintaining the project through its lifetime, O&M strategy of the project, to ensure that there are no issues throughout its operation, through its 20 to 25-year operation, to ensure that the revenues do not decrease and the project is able to service its debt. We look at other elements such as the environmental and social impact of these projects, insurance, the right insurance package in place to ensure that, if there are any issues with the project, that the right insurer is in place to cover for any issues that might arise. So, I mean, there are many elements that need to be considered when we're looking at a project, but in the end, it's all meant to come together in a financing structure that ensures that it is financially sustainable, not just for the developer, but also for the lenders. And another element, and I mean, this is obviously very clear, but when we're looking at these type of projects, one of the first things that we look at is, the transition impact and whether this project is adding to the country and to the bank strategies. But I mean, it's very clear that BESS projects are aligned with energy and green transition targets of the governments that we are working with and for the bank. So I think it's very clear that these type of projects are aligned with net zero targets and the way forward on green transition. So that's overall what I would like to say. Maybe a couple of elements on maybe I can add.
Mahmoud?
Yes.
It would be great if you could come to him just because we're running a bit out of time, so that we also could have the other speakers still to contribute. But if there's anything important you still want to raise, but I think this was already.
No, I think that's overall what I would like to contribute, and of course happy to answer any questions.
Yeah, thank you so much. I think this was very insightful, and everybody, I hope you can stay on a few more minutes so that we can also still answer questions. Let's move on, and sorry for being a bit in a rush. Next is Lujain Saidi, Deputy Project Manager at the Green Economy Financing Facility in Jordan. So also great to have a perspective from another MENA country. Mrs. Lujain, can you turn on your camera?
Yeah, I hope you can hear me and you can see me. Thank you all for your time today in this webinar, and I think it's also, it has been an opportunity that I came right after Mr. Mahmoud, because the project I'm representing today, the Green Economy Financing Facility, it's a project that is developed by the EBRD in more than 30 countries. One of them is Jordan, and we as Frankfurt School of Finance and Management are implementing this project in Jordan. And this is a green finance project. So I'm from a technical background. I'm an engineer, and I have been working in the banking sector with the banks, commercial banks in Jordan, and with some development banks in the region in the green finance project. So I have gained, or I have actually gained the privilege to be in both sides, the technical and the banking side of green projects overall, and the renewable energy and the storage energy systems in particular. I will touch base on, or will zoom in into Jordan specifically, and then we can zoom out to the MENA region overall. I will not take time from the last speaker as well. Jordan is on track, let's say, in the renewable energy sector overall. So Jordan has 15% of its energy mix in coming from renewable energy resources, and 27% of its electricity mix coming from renewable energy resources. Those numbers are per like the end of 2024, and Jordan originally had the plan to have 30% of its electricity mix coming from renewable energy by 2030. So we are way ahead of the target for 2030, and this has been a success, but also from the other side, it has been a challenge for the grid, because we don't have like yet the smart grid systems and the grid management systems in place, and ready to have all of those renewable energy on grid systems connected to the Jordanian electricity grid. That's why in August this year, the Ministry of Energy has launched the new regulations regarding the renewable energy, and included in particular the flexibility and actually the launch of allowance for the storage systems in residential, commercial, and as well industrial sectors. So this is still new, but also previously Jordan had like a few of the energy storage systems in residential, let's say rural places, or as well in mega scale projects, but it was still modest. So we had 50 megawatts of the energy storage systems, and we expect that after the new regulations, as it's the baseline of all of the success of projects in any country, if you have a stable or a clear actually regulations and laws in one of the sectors, it will combine the forces of the private, the international developers, the private sectors, the banks, or the financial arms of the country itself to build more towards those, or taking those regulations to develop this sector more and more. So and this is what's happening in Jordan. So based on those regulations, we can see as well the support of some governmental bodies like the JREF, which is the Jordan Renewable Energy and Energy Efficiency Fund, which gives financial incentives to people who implement renewable energy projects, whether it's on grid or off grid now. And as well, this is from a governmental, let's say, side, and from the international side, we have such programs as GIF, which supports the banking sector of Jordan, the commercial banks, with the technical assistance because it's all, when we say a project is bankable, we need to also make sure that the banker himself understands the basics, let's say, of the project to be able to take the technical aspects of this project into consideration when studying the credit assessment or when giving the finance to this project. So we provide the technical assistance to the banks themselves, and as well the EU and the Green Climate Fund provides financial incentives to those clients who implement the renewable energy projects and the green projects in general. So I think this is a clear example of how can joint forces push the energy storage systems or similar sectors towards the correct, let's say, approach. So we see first the regulations, we see the financial institutions, we see the international institutions, and as well, to end the cycle, we need the awareness and the acceptance from the business owners or the individuals themselves. So the awareness of, like, if you have only the regulations and projects all over the country, the business owners and the clients will be like, how can I start? Where can I start? How can I benefit from this regulation? What's on me? What I need to present, and how to implement or how to be part of this whole system towards the renewable energy. So this is as well one of the aspects that we saw it's very important, and because we deal directly with the financial institutions and their clients, we touched that the banks or the financial system, financial institutions needs to have the full awareness to pass it to their clients, so we can end the cycle with success stories in this sector. And I will not add more about the projects that it's the business models, because I think my colleagues already covered it. Or maybe one of the projects that we have recently seen, it's a commercial project and it's shared storage system. So building developers as well in different sector, which is like the construction and building sector, could as well have could participate in expanding the energy storage systems in the country. So they started building shared storage, or thinking actually planning for the shared storage systems within their compounds, the commercial compounds.
Thank you, Mrs. Lujan, for these insights. Very, very useful and a good addition to what has been mentioned before. Last but not least, it's my pleasure to introduce Dr. Ashraf Khadam, our Senior Global Energy Specialist at the Islamic Development Bank, and also pleased to mention that ISDB is our project partner at MENALINKS. Dr. Ashraf.
Thank you so much, Dr. Corina. Thank you, colleagues. Thank you so much. This is really informative. My name is Ashraf Khadam. I'm a Senior Global Energy Specialist from Islamic Development Bank. Islamic Development Bank is covering 57 member countries, including MENA region. We are working heavily in energy sector, particularly in renewable energy in MENA countries. So just let's first look at the global context of the BESS market is experiencing exponential growth globally. So with installed capacity projected to increase by 35% this year. So how do we translate this global momentum into local action? So just I will mention some of our mechanism to finance such projects. So for smart grids and BESS project, we offer suitable financial instruments designed to de-risk and attract private capital. So primarily we have public sector financing, and it's provide governments with concessional loans spanning 15 to 25 years, including grace period. This will be public financing to the government, blended finance. Also, this will be combined with loans and grants instruments. But also, we do have public-private partnership finance, and I will talk about this in details. So Islamic Development Bank has a specific modality for engaging with private sector. So the process for developer is to first the developer should secure the necessary concessions from secure the necessary concessions and agreements from the country. This is the first action. Also, discussions with the country should be done. After that, after these steps, the developer can formally approach the bank for financing. Islamic Development Bank has two primary windows for private sectors. We have the PPP unit and we have ICD. It's Islamic Corporation for Development of the Private Sector. So basically, the PPP unit, it handles large-scale projects. It typically have projects like not less than 50 million of US dollar. But for less than that, for small projects, small-scale projects that fall below this threshold will be handled by ICD. So basically, for the large project, we have the evaluation. So the basic evaluation criteria, as mentioned by many colleagues, we have the technical aspects and also the financial aspects. For the technical aspects, the developer or the consortium or the developer should have proven track records and demonstrate experience in developing similar projects within the region. Also, the financial strength, strong financial statements, and also solid balance sheet to be to demonstrate credit worthiness. For the financing structure, as you know, that the debt to equity ratio, the standard project financial structure will be 80 to 20, 20 debt, 80 debt and 20 equity ratio. Basically, the equity will be handled by the developer, and the bank. For instance, IDB is contributing maximum 40% of the debt portion of the project. Also, there should be due diligence process to be conducted. The developer are required to hire independent technical consultants to support this assessment, and also and as I mentioned, the size of the project also, that depends on how we handle that one. So I will come back onto some considerations about renewable energy and also BESS projects. And as have been mentioned by colleagues, that solar and wind, those are considered mature technologies with many experienced developers. Consequently, technical risk is generally low here in renewable energy, solar and wind. However, for the large-scale BESS, this segment is still nascent, as mentioned, and as we know all. So many large projects are still under construction or in development. So this we can say that now we are in a learning phase. So the risk might be moderate to high. Basically, because we can say the performance and degradation risk, because as you know, like just we have a mobile battery. Batteries normally naturally lose capacity over time, and if faster than expected, degradation this directly reduces the project ability to generate revenue in later years. Also, we have the safety and fire and also technology obsolescence, because we have rapid innovation in this technology, and we have so many lessons learned should be taken from this technology. We have like in Morocco, we have a couple of thermal storage in Morocco. We should take also lesson learned and so in order to mitigate those risks. Finally, not to take much of time, so we have also a couple of questions to be asked, because as we know, for developer, it consists of consortium. Sometimes some partners are not lack the technical capacity, but that might have a financial capacity. So we'd like to ask, who is the EPC contractor? Do they have a strong track records for constructing similar projects in the region? Also, we have to ask about the O&M, operation and maintenance contractor, who is responsible for that and their expertise for that. This is very important. At last, I just would like to bring, we have heavily interventions in BESS, in planetary energy system in Central Asia. And we have approved in 2024 $50 million as the financing from the bank, Islamic Development Bank, in Uzbekistan, in Tashkent. We have 200 megawatt solar power plant, in addition to BESS, it's 334 megawatt or 500 megawatt hour. So this the objective of this is to ensure the stabilization of the grid and also avoid grid congestion and regulate peak loads, and also improve the efficiency and reliability of the power supply. So this is just an example, but we have also another project in Uzbekistan, also another one, and also in Kazakhstan. Now we are working on it. So we hope to replicate this kind of project in MENA region. Thank you, Corina, and over to you.
Thank you, Dr. Ashraf, for these additional examples. Yeah, and sorry to rush the speakers, but unfortunately we are already a bit over time, but I hope there people joining the webinar still have a few minutes to stay on, and as well as the panelists, so that we can still answer one or two questions that came from the audience. Let me start with one question that was raised to Dr. Khaled Askari. From a technical perspective, does the national grid status add to the risks associated with BESS, and how could this be factored into the tariff determination? Dr. Khaled, is that something?
Thank you, Corina. I'll be very quick. And thank you, Hatem, for the question. When I did my intervention, I focused mainly on the technical aspects that are very specific to the BESS. The grid aspects, of course, are not very specific to the BESS. They will be obviously important aspects to consider in any renewable energy project, PV and wind and so on. And for sure, we have to make sure that the project is complying with the grid requirements or the grid compliance code. So they will have to do the proper grid impact assessment and grid impact studies to make sure that the project technically is complying with the grid. And as my panelist colleagues have referred to simplify most of the BESS projects, usually the payment is based on a capacity charge. And as such, the payment obviously is not linked to the availability of the grid, because just basically capacity payment. Thank you.
Thank you. Thank you, Dr. Khaled. Let's move on. I think there's some questions more on our financial specificities that maybe we can, that could also be answered bilaterally. Let's maybe take another general question. Considering battery energy storage combined with renewables, what would be the main drivers that could affect the blended tariff structure? and how do the revenue streams could affect, how will the revenue streams be affected compared to PV standalone projects? Is there anybody who would like to answer that question?
Yeah, happy to.
Please.
Of that.
Yeah.
So, well, on co-located and BESS, there are different models, different structures of the project, right? There's a structure that would entail two-part contract and one for BESS. And we haven't seen this common in emerging markets, and this is basically all because of regulatory constraints, right? This with the model where renewables, PV, or wind, whatever, and BESS have a blended tariff in one contract. In this case, we're having two different technologies that need to be modeled in the debt sizing for the for both of them, and that adds to the complexity because of the BESS that comes with the risks of, for example, of the interface risks, and for the technical considerations that had to be factored again in the debt sizing requirements, including the cycles per day, the degradation, the availability, the round trip efficiency, and all of that. And because of this risk profile of the BESS, lenders usually opt, normally opt for a more conservative inside the debt, and that is to ensure that the very payment capacity under the conditions are there, especially because this is coming with operational uncertainties here. So just to answer the question that I can see here, that yes, lenders go for the most conservative way when BESS is integrated with renewables. Over to you.
Great, thank you so much. Let's see, Dominic, are there any urgent questions we should still answer? I see there were a few more, but I feel some of them could also be maybe answered bilaterally.
No, there's in general just one question left on the scenario to be chosen when PV is co-located with BESS. Maybe we have time for this as we generally don't have much more questions from the audience. So the question would be, how does employing BESS would affect senior lenders' choice of a convenient probability of exceedance scenario to choose? So talking about P50, P90 scenarios to determine the debt sizing. Is there somebody who would be ready to answer this question?
Well, I've just answered it in my previous answer. Yeah.
True. Yeah. All right. So sorry, Corinna, please.
Then if there's no urgent questions left, I would like to thank all the panelists for their contributions to this roundtable. I found it extremely insightful and I learned a lot. So we heard about existing and emerging business models, about the important role of providing more standardized solutions, and of course the important role of secure revenue streams for financial viability, but also on many technical aspects like how to deal with degradation. I think there would be many more aspects to mention. I think also the aspect that there's, of course, this is an emerging technology, and there's still a need for learning and capacity building, and is important. So And maybe just to mention that I think here today we focused mainly on international finance institutions as well as representatives from ETC and a project developer represented by SCATEC. But of course, there's also an important role by commercial banks to play, which we haven't represented on the panel today. But of course, also this is only the first roundtable of this of the MENALINKS finance workstream. And as we will work more on the financing conditions of BESS in the different focus countries of the MENALINKS projects, I hope there will be more room to exchange and also to discuss with more stakeholders. But I found this very insightful as a start. And so with that, let me thank you all for your contributions. Also, Dr. Margaret Mahmoud and Caroline and Dominic for their interventions in the beginning. I'd like to mention that if you have some material available for download from this webinar. So there is the finance landscape report that Dominic presented. You can find it under the link. You can go on the QR code that is shown here, or you can just go to the link that is shown. And we will also add the webinar presentations there, and also the webinar will be, has been recorded, so I think it will be available later on also for those who missed it or those who want to revisit certain aspects. With that, thank you all. Oh yeah, and one important point, if you want to stay up to date with what's happening in the MENALINKS project and all the activities we are doing there, please register to our newsletter. Again, here a QR code with which you can register, or also feel free to contact us directly. It was really a pleasure to have you all at this webinar today. And thank you for sharing your insights. Looking forward for further exchange in the future.